All right. Welcome, everybody. This is episode 9 of the Stablecoin Builder series. This webinar is a monthly live session for founders, entrepreneurs, and operators building products in the stablecoin space. We're going to cover topics for projects at every stage of growth, from idea to funding to shipping. We run these sessions to help the stablecoin ecosystem grow by tackling real infrastructure challenges together. Quick intro. For those who are new, Utila provides fintechs, banks, and enterprises with infrastructure to build and manage stablecoin and digital asset operations. We serve over 200 institutions across payments, treasury, trading, and more, and we help secure over 20 billion in volume every month. Today's topic is privacy for stablecoin payments. As stablecoins become core infrastructure for payments, treasury, and cross-border settlement, institutions face a growing challenge: how to operate on-chain without exposing sensitive financial activity in public. Transparency may be native to blockchain infrastructure, but most fintechs, payment service providers, banks, and enterprises still require privacy around balances, transaction flows, counterparties, and operational activity, especially at scale. We have a great lineup of speakers today. I would like to have each of you introduce yourselves, just a quick blurb on where you're at, what you do. I'll start with you, Sophia, if you don't mind.
Yeah, Lauren, thank you so much for having us. Really excited for the conversation today. I'm Sophia. At Aleo, we are focused on enabling global payments anywhere in the world in under a second for less than a penny, all privately. And so very excited for this specific topic because I feel like privacy is a key to unlocking enormous volume and growth, especially on the institutional side. And we're very excited for where the industry is headed and the growth that is to come. I'll leave it at that.
Excellent. Thank you. We'll go round robin. I'll pick on you next, Jose.
Hey everyone, a pleasure to be here. Jose, I'm a business development lead at CK Sync, and we specialize in enabling on-chain money flows in a way that is both private and compliant. So thanks for having me here. Really appreciate the opportunity.
Of course. I'll let round robin for the next few intros. Or Aurélie, would you like to go?
Yeah, hi. Looking forward to the great discussion with the great panelists. I'm Aurélie Dhellemmes. I'm in charge of heading network growth for Canton Network, working for digital asset, created Canton Network. And so our mission is really to bring capital markets on chain, and we'll go deeper into that later on.
Excellent, thank you. Arik, if you don't mind introducing yourself.
Of course. Very excited to have this conversation with so many great teams that are building in the privacy space. I'm from Zama. We're a confidentiality layer for on-chain finance on public blockchains, mostly focused on FHE technology-based privacy, but actually with a lot of other completing factors. So yeah, great. Excited for the conversation.
Excellent. Lukas, and then George will get you, and then we'll get into the discussion.
Yeah, hi guys. Great to be here. Lukas, my name. I'm working for TACEO. At TACEO, we do privacy on public blockchains in the identity and the finance space. So we are chain agnostic and can act as a kind of privacy layer on top of any public chain out there.
All right, and George, we'll end with you and then we'll get started.
Yeah, thanks, Lauren. I'm Georgi, founder of hinkal. At hinkal, we provide privacy on all the main public blockchains, EVM, Solana, and Tron, and privacy that helps to protect also the relationships and the amounts.
Excellent. We have a great group here from many great teams. So I'll kick us off with a pretty broad question, but it's an important one. Public blockchains were designed for transparency. Why is privacy becoming such an important topic now? And second, what concerns do institutions have when evaluating stablecoin payments. I'll try and go in the same order that we did intro. So Sophia, I'll start with you. I'd love to get everyone's thoughts on this question.
Yeah, it's a really good question, and I think highlights some of the maturity of the industry. I think when the industry first was started, we started with these public chains, and that was good for a number of use cases. But both on the institutional and the individual side, there are huge limitations to not having public transaction and to having all your data live publicly on chain forever. And so I would say on the institutional side, institutions really can't adopt fully on chain payments, trading, use cases, treasury management, if all their data is going to be publicly displayed and visible to their competitors, to traders, to counterparties, fully on chain. And so it really limits the adoption that can happen on the institutional side. And on the individual side, I think there's also a case to be made where privacy is required for mainstream adoption. I mean, who wants a college ex to find out that you got married because you paid your wedding florist on chain? Like, nobody wants that information exposed, and definitely not a text from that ex. So I think, excuse me, there is a lot of opportunity when we're able to enable compliant private payments where you're still able to discretionarily disclose who has access to what information, but not display it for the entire public.
Great analogy. I think a lot of people can relate with that. Jose, I'll get to you next.
Yeah, in my view, I think it's become more a matter of data protection than it has about privacy. So yeah, we could use an example like what Sophia ended up referencing. You could also look at, let's say, well, using a more boring example, I kind of liked her example better, but if you're talking about payroll moving through stablecoins, why would you want that compensation data to be public? And what kind of dissent or controversy could that create within an organization, right? With one employee seeing what somebody else is getting paid. And nowadays, you don't really even need to know how to read a block explorer. With AI and the rise of AI, you could deploy an agent. The agent can scan that blockchain data and be able to piece together whatever narrative or whatever information you want to go ahead and unveil or be able to uncover. And I think another example that is worth highlighting here is the fact that it's not just about data protection, it's also about strategy protection. So a lot of these companies that are deploying funds or investing, allocating capital into different funds on chain, that's a lot of their proprietary knowledge and proprietary strategies, and they don't want that information to be leaked on chain. And so we're talking about both companies maintaining a competitive edge, protecting their strategies, but also people's data being protected. And those are both very critical areas, right, that we need to make sure we deliver on. And I know companies for a fact do not want to do a trade-off where they have to compromise on that protection in order to be able to move money faster and cheaper.
Excellent answer. Aurélie, and I'll repeat the question just for everyone. Yep. The question is, and again, you guys have been answering it, but just a refresh. It's, why is privacy becoming such an important topic now? Very broad topic, just for a refresh, since we have quite a stacked panel today. Aurélie, I'll get to you.
Yeah, just to add on to what was said earlier by Sophia and Jose. So yes, there's also the banks, for example, they have fiduciary responsibilities to keep customers' information confidential. So it goes also beyond that. Like they would have to almost close shop if there was a breach of that. So custodian, the same. Like custodian publishing who holds what there is would breach completely every client mandate they have. And so the fears that we're seeing from our clients, like people building on Canton, such as like Visa, Virtue, Citadel, Broadridge, there's different things. So we talked about, of course, exposing payroll. We talked about leaking clients' position. There's also front running of large orders. So if I put my order there, it's going to be front run, or signaling distress through visible collateral moves. And so also what is important is like, I feel everyone is almost like binary, like privacy, no privacy, privacy, public, private. I think it's an easy trap to fall into, and the world is not that binary. The metaphor I always love to use is Web 2. In Web 2, it's not like everything is private or everything is public. It's like every app at an app level, you decide like what is on a need-to-know basis. It's like what we call configurable privacy. And so at the app level, you can be, let's say if you're a bank, you need things to be more on a need-to-know basis. If you are like a newspaper, it can be a bit more public. And then you can still interoperate together. The example I love to use is when I was living in Singapore, I was banking with a bank in Singapore. That's super like private. I was also like my utility bills was with the SP services, so the electricity in Singapore. And despite those being private, they could still compose, so interoperate. So automatically, end of the month, that would get paid. My utility bill would get paid through the bank account. So that's again like not a binary world. Like it's not like everything is private, everything is public. It's everything is on a need-to-know basis, based on each app developer requirement, and still being able to compose with other apps. And so that's the premise of Canton Network. Yeah.
Excellent. Thank you. Arik?
Yeah, so not to repeat too much, I think one of the changes that happened over time is just the kind of trade, the kind of processes that happen on chain. Initially, I would say a lot of this was either like very much believers in specific things or like greed-based, right? So if you believe you're going to get 1,000x on anything you do, you're not really concerned about the privacy at that point. You just want to click, and immediately get to trade whatever you're trying to trade. And right now, what we're seeing is like what everybody kind of wanted to happen over time is actual institutions and actual companies that are building a useful product for end users are building on chain. And as that happens, the consideration is not just how do I most quickly ape into something, but rather how do I build a sustainable business with reliable infrastructure, with compliance, with security, with the right kind of guarantees. So suddenly the evaluation is much more, professional, oriented towards a specific use case. And a lot of the real use cases, privacy is non-negotiable. Like it's just part of the base definition. You cannot do them like, a few of those examples have been raised. It's just a core requirement. Without it, it doesn't happen. And I think we're at the phase that these are the use cases that are coming on chain pretty meaningfully. And so they bring that requirement. And the other thing is some of the other problems that really, really were the core of making blockchains unusable were mostly solved. Right? Like blockchains are faster than they used to be. They're cheaper than they used to be. So like a lot of sort of like kind of Maslow pyramid, right? So like as some of those problems were solved, then you can basically use the chain for the thing you want to do. You're like, okay, actually, I still cannot use it because of privacy. And I think this is why privacy is now a thing, is because it's the latest barrier towards doing the thing that you want to do as a business to create revenue and serve your clients. So it's a very, and the other thing maybe worth saying is that the technology evolved. Like good privacy was not really possible in the blockchain space 5 years ago, 10 years ago. It was very limited by use cases, like, Zcash has kind of been almost the only option. And now there's a lot more technologies as seen in this panel. There's like very different technologies being implemented here. And a lot of technologies matured to be very, very usable for different use cases. So that's, I think, is another thing that basically creates this new wave.
Excellent. Thank you for that answer. Lukas, any additional thoughts? I love that we're getting multiple views on this important question.
I mean, the main reason for me why privacy is finally a thing in the space is we see a new type of user group finally coming to on-chain use cases. I can remember when I running a crypto investment fund 10 years ago, we were telling our LPs, yeah, the banks are coming. Now you need to invest. You need to need to have exposure to digital assets because banks are coming. TradFi is finally coming to crypto. It took us literally another 10 years to make this promise real, right? So now it seems like it's finally there. The industry understands the benefits stablecoins and digital assets can give them, and with a new user group, which is quite different from the people we have seen so far in the space, there are different requirements, and especially in terms of privacy. Whereas crypto degen 5 years ago might not be too worried about exposing its wallet and transaction history on chain, a financial institution it definitely is. And I think that's the main reason why we see now this push on the privacy side, where a lot of those players say this is probably the last unsolved component for finally getting on-chain and roll out those use cases we're all waiting for and working on, finally to millions of users.
Excellent. Thank you. And we'll end with you, George, if you don't mind, then we'll start with you for the next question.
Yeah, I think we are currently finally achieving the use case where counterparty privacy matters, because initially when we had degen traders or farmers, counterparty privacy didn't matter as much because you did a trade, but like who cares, right? Nothing really connects you to the counterparty that you're leaking the info to, and you don't have direct relationship that you're trying to preserve. And currently with finally settlements happening on chain, enterprises moving and receiving stablecoin actually as a payment method, counterparty starts mattering, because finally, if you're a consumer paying the merchant, you can see what's happening with the merchant. If you're a merchant and making payout to the vendor can see how much you're earning. So it's a very direct exposure of the most sensitive part of your business. That enables finally privacy to happen at scale.
Excellent. Thank you, guys. I think it's so valuable and interesting to get all 6 of you in the room and get your viewpoints on that big question that all institutions are asking right now. So on that point, and again, George, I'll start with you and go reverse order. How should institutions be thinking about transparency versus confidentiality? I know that's a big one, and I know that we sort of touched on it this round, but what would be a good answer to that?
I think there are many types of institutions, right? So there are institutions like merchant institution, some like sort of, yes, but it's not the JP Morgan level of institution, right? So I think if we start with low mid-tier institutions, why they care about privacy is because they are finally adopting basically faster, on time and 24/7 rail to receive money and to make a payout. Whenever they do this, they have a problem. Like all their vendors now can see how much they're paying other vendors, and this actually compromises their margins. So I think the right approach to privacy is who actually monitors this and who can see. So there's direct relationship, which is counterparty relationship, who can see this information, but can competitors see information? And in the past, I think we used to think about, do you want your competitors to see how much earning? I don't think that we are at that level that there's basically 24/7 chain analytics tools that allow competitors to just plug in, type your name and see all your transactions, right? So we are not at that level. So I think that the direct problem is counterparties still. And for this low and mid-tier levels, privacy of actually amounts and relationships is crucial to preserve.
Excellent. Thank you for that. And Lukas, a different question for you, but same general topic. Can organizations maintain compliance while limiting data exposure? And feel free to also, if you have any thoughts on the previous question, feel free to chime in on that as well.
Sure. So I think what we need to achieve, and this also ties back to the previous questions, transparency versus confidentiality. I think transparency actually existed for a reason in the first place. So if you think back on the early days of Ethereum, the chain was intended to be public for a reason, because in order to validate state and state updates, you need to replicate the state across hundreds or even thousands of nodes around the world. And for that, you have to share all the state and data with those nodes. So it's not that Ethereum set out and say, we want to be transparent because for the sake of transparency. It's more like we have to be transparent in order to ensure verifiability and accurate state updates in our network. What we see and what we are working on is that we can achieve both, right? So we can get this verifiability and security of a network while maintaining a certain level of confidentiality. So, and I think that's the way how institutions should approach it. They should get all these guarantees blockchains give them without having to expose all their interactions, all their wallet history, all the balances on-chain. The way how we do it is we encrypt this data, right? So we store only encrypted information on-chain, but still use technology, in that case it's heavy cryptography, to ensure that state and state updates are always true. Nobody can make any malicious state updates, and you can still trust the underlying network. And I think that's the way how to approach it to get the best out of both worlds.
Excellent. Arik, I'll jump to you next. As far as, the first two questions, feel free to chime in. But I'm curious, where, in your opinion, in your view, where does complete transparency become a disadvantage?
Right. So an interesting way to phrase that last part. Yes. So actually, I think the way and this even goes to the first question. Yeah. The way I would think about this is that I would expect an institution to say, by default, I want more privacy, right? Mm-hmm. Like the full transparency, as right now we live in a world in the blockchain space and only in the blockchain space. We live in a world where the default is full transparency to an uncomfortable level. And the not default is you add privacy to it. And to some extent, I think it should be flipped. And probably we're going to have a lot of people agree on that. But like you would start with expectation of a lot more privacy. And then the question becomes more privacy of what and privacy from who. So like the definition starts with privacy and they're okay, like who do I really want to keep private from, and who am I okay with this being public? And for example, a lot of times, I'm okay with not having privacy from my bank. And so like maybe I'm the kind of institution that is okay with not having privacy from their custodian or their bank or something like that. And a lot of institutions will tell you, I'm okay with not having privacy from a regulator because I don't want to go to prison. So, so they don't want privacy from the regulator. Great. So they don't need privacy from the regulator. But it doesn't mean they don't need privacy from anybody. It just means they don't need privacy from the regulator. And so I think a lot of this, I think maybe the initial approach to privacy was very much all or nothing. You either get full privacy, full confidentiality from everybody, and with a strong guarantee that you will have privacy from everybody on everything. And the new generation of privacy protocols, which I think pretty much everybody here is part of that wave, is privacy protocols where there's a lot more choice, there's a lot more configuration, and you can basically create much more tailored privacy to the use case. And for a lot of institutions, it basically means privacy from the public, not privacy from my providers or my regulators or my counterparties in some situations, partially. So I think that's kind of like the way I would expect this to transition over time. I think this is going to be it's kind of like starting as a non-consensus thing, and I think it becomes more of a consensus thing over time, where people say, I definitely need some level of privacy. Now let's talk about the trade-offs of that privacy. Because in some situations, you basically start to have some trade-offs, for example, of composability with other mechanisms on the chain. We as a company who builds on top of public blockchains would say, okay, if you're going to a private blockchain, you're losing composability with other participants in the public blockchain. But then, this is kind of like the trade-offs. I think this is kind of like the way to look at this, is like defining in the use case, what are you looking for? Starting from, I need some level of privacy. Let's define the right level for me, given the fact I want to have composability with existing things that happen on the chain that I work on. I want to be at the same chain as my counterparties. What kind of security do you want? Is local privacy, like tied to a server, okay for you? Or do you need more decentralization? Is the privacy cryptographic or hardware-based? And what does it mean in terms of the amount of money you can have there? And eventually, probably, maybe one of the biggest risks is the security risk. Like, what happens if there's problems? Like, do you just lose privacy, or do you just lose all of your assets? Which I think is also like a core consideration. When privacy and custody entangle together in the same mechanism in a way that becomes undistinguishable, I think it becomes like another hard trade-off for institutions to do. That's why we do believe in a stronger separation between different layers in the stack.
Excellent. Great points all around. Aurélie, do you have any thoughts on that as well? Anything to add? Oh, I think you're on mute, unfortunately. Don't worry about it.
Sorry. Okay.
No worries.
Yes. So again, to add on that, so we don't live in a binary world, and like listening to what are the needs from the different app developers, clients, and having really full configurable privacy, everything on a need-to-know basis. So it's really at a structural level from the beginning of Canton Network. So think about like validators, like a simple concept of validators on most blockchain, like all validators on the blockchain, they validate all the transactions. Just that alone is not a need-to-know basis. On Canton, you would just have like, okay, you have a set of validators that are validating a transaction, and not the whole network. Also, like in terms of design, we often hear about private networks. And how it's not working for institutions, because if you think about it like a avalanche type of private network, it's like being in a room, like four walls, like you have a few people in this room, like let's say you have HSBC and Goldman Sachs. It's like almost like a private club. You can see it's not private because everyone can see what other people are doing in this private network. So that's and also another point that we haven't touched on is governance. For example, like if we see a lot of proliferation of L2s, and it shows that something on mainnet it is not really working, and governance is a big component of that. So imagine if the Fed and the EU both wanted to do their own CBDCs, and they wanted that to be composable, interoperable. Other solution would put them on the same ledger, but does that mean that the Fed partially governs the euro or vice versa? So there's also a governance aspect. And on Canton Network, you have like cantons where you can have your own governance on your own canton. So that's also a big component. And we often discount the governance aspect, I would say. Yeah.
Excellent. Yeah, and great bringing up governance. That is an important topic. Jose, love to get your thoughts on this. I know you're very involved with Providium at ZK Sync. Would love your thoughts.
Yeah, from our perspective, we have a product called Providium, and what we've done here is we've really taking things up a layer higher in terms of not just offering infrastructure to banks and institutions and saying, here, go build whatever you want to build, but we're actually offering a software layer or a middleware per se on top of the infrastructure to make it usable. So when I think of how institutions should be thinking about transparency versus confidentiality, my mind immediately goes toward how do you actually do that? How do you actually configure that? Everything we're talking about here, what does that look like in practicality, and how does it become user friendly for the institution themselves, and really minimize that friction or inertia for them to engage with what we're talking about here. So we're really making a strong effort to go beyond the theoretical and really dive into that end user experience, treating that bank, treating that financial institution as the end user and saying, what do you need to see? What do you need to configure? What do you need to toggle in what interface? And basically giving them a control plane and saying, you're now going to fly your plane the way you want to fly it in whatever territory you want to fly, but you actually know the controls. Whereas historically, it's been the opposite. You're kind of flying a plane, but you don't really have the steering wheel, and it's become kind of this black box or something really hard for you to navigate. So we're just focusing on how do we enable that confidentiality, or even that question of transparency versus confidentiality, to be navigated in a very user-friendly way. And I think that's the question that many institutions should be asking for themselves, especially if they have teams internally that are getting now acquainted to this privacy on chain narrative and functionality, and want to make sure they're able to move fast.
Excellent. And Sophia, anything to add?
Yeah, I really like, Jose, what you were just saying, and it makes me think of the North Star that we're trying to get to is give institutions control and consent. So they get to determine what is the right level of privacy for them, and they can configure it at their requirements. I think, Ariel, you had mentioned kind of at the app layer, things are configurable, but I would argue that you need things even more configurable within the transaction level. So going one step deeper to say, if I'm going to send a transaction, who needs to know about this? Maybe my auditors, maybe my compliance team, maybe my regulators. But not every transaction might be governed by the same regulators. Or perhaps I have different compliance teams who need to be informed about different types of transactions. And so when we think about giving those institutions the control that they need, here is where they need to be able to configure what sort of privacy makes sense at the transaction level. And at Aleo, we're very focused and feel like that is something that's a differentiator, because the privacy has to be built in from the ground up. You can't tag on privacy later on after a transaction is made, for example, or at the end of the day. That doesn't work, right? And so you need to start from first principles and really understand from the ground up, how are we delivering privacy for the teams that need it configured in their specific ways.
Excellent. Thank you all. That was a really, really interesting round of questions. I hope the audience is learning a lot. I know I am. Next topic is around, private stablecoin infrastructure. What does that actually look like? And I'll go again reverse order. So Sophia, we'll start back with you. What are the main approaches to privacy preserving financial infrastructure today? Big question, and I'm sure everyone on this panel will have lots of thoughts.
Yeah, it's a great question, Lauren. I appreciate the thought here. And I can't remember who had mentioned Zcash, but on the call prior, we were saying that, Zcash was one initial way that you could get privacy. And it had a lot of limitations. It had a lot of impressive things about the protocol. But one of the limitations was that it's a volatile asset. And so what we at Aleo have done is we've said, how do you have the same level? How do you have configurable privacy and have it in a stable currency. Because if you're a business, you need to always know how much are you paying your vendors. And it can't shoot up to, skyrocket one day and then be down 30% the next day, right? That's not going to work for your business. And so you need a stable asset, you need the privacy at the chain level, and then you need the interoperability. And so Aleo has partnered both with Circle and with Paxos to launch USDC and a version of USDG called USAD on Aleo, which enable institutions to send stable payment anywhere in the globe for less than a penny in seconds. And we feel that this is a huge unlock for institutions and individuals to have this level of access at the configurable privacy that they need. And it's unlocking a number of use cases, which we can continue to get into. We've already mentioned payroll. We've mentioned, I'll just mention here some work that we're doing with Mercy Corps around humanitarian aid. And also work that we're doing more on the defense tech side. And so there's all sorts of unlocks when we're able to take and create a stack, which includes private, compliant, stable payments.
Excellent. And Jose, on that topic, and sort of another question to add on top of that, how do confidential transactions differ from traditional blockchain transactions?
It's a great question, and I've seen two main approaches being applied to privacy at an infrastructure level. Someone please let me know if I'm missing anything. Definitely not intentional. There's the math-based approach, which consists of zero knowledge proofs, FHE or MPC, and then you've got the trust-based mechanisms, which may entail like a consortium, right? That you can curate and you can decide who it is that you trust as a counterparty. I want to be able to work together around that. And so if we're talking about confidentiality, I think it's important to first enforcing it today and first deciding on what it is that you are comfortable with as an institution, right? And then let's say, in our case with Matter Labs and CK Sync, we're utilizing the zero knowledge proof mechanism. So for us, really, when you're talking about a confidential transaction, we're essentially proving that transaction onto Ethereum L1, but we're configuring at the transaction level what's public, what's private. So I like what Sophia was mentioning earlier about this layer of configuring at the transaction level what you're comfortable disclosing, because we're basically enforcing that and settling it in the form of a zero knowledge proof, which has gotten the blessing, from the various entities, regulatory entities, and even the Ethereum Foundation itself. And so we're really focusing on enabling that mechanism so that when you see that transaction on the Block Explorer, you're basically seeing the evidence that the transaction happened. You're protecting the integrity of that transaction without revealing the contents that are sensitive, that need to be protected in this case. So that would be an example. I don't want to branch out too far because I know there's experts here in the other mechanisms. So I'd probably just defer to them to let them explain how some of the other mechanisms work. But zero knowledge proof is really the one that we are heavily investing in, and we really believe is the mechanism that enables people to just take off some of the heavy burden behind deliberately trusting or deliberately having to coordinate that confidentiality.
Excellent. And then Aurélie, on that topic, so again, the questions are, what are the main approaches to privacy preserving financial infrastructure today? And then second, how do these confidential transactions differ from traditional blockchain transactions?
Perfect. Thank you, Lauren. So we talked about already configurable privacy. That's one. Composability, super important. That's the key value proposition in blockchain, ability to compose. Atomicity, and the fact that it's done in an instant, which is not given on every blockchain. And governance. On the governance aspect, and why Canton, so the developers were mostly in Switzerland, so the Canton in Switzerland. So Switzerland is one country, but it's made of different cantons. Each canton has different rules, different languages, even spelled differently. If you go to Geneva, the French part is spelled with a C. If you go to Zurich, it's spelled with a K. And each canton has their own rules. But when you take the train, I never feel that I've crossed a border. It feels like one country. So that's super important in terms of the design. What I wanted to touch on also is like big institution, let's say DTCC. DTCC chose Canton for tokenized US treasuries. That's massive in terms of financial building block. And that's going to unlock a significant upside there. And what we're starting to see in terms of use cases, just to make it a bit more sticky for the audience, first is on treasury management. So let's say you are a retail shop and you get most of your, like a grocery store or a cinema, you get most of your cash on a Saturday. You have to wait the Monday that the bank is open to be able to earn yield on your cash. So what we are doing is like on one side, you have the tokenized deposits. So the cinema would have like in the tokenized deposit, let's say with HSBC, JP Morgan, Société Générale, and then automatically swap to, let's say, Franklin Templeton, IBanG 24/7. And so they can earn yield on their cash during the weekend. So that's an example of like a composable private transaction that is done, adding a huge value to the treasurers. So that's a huge use case on the treasury management. Another big use case is prime brokerage. So on the collateral management side, today, prime brokerage, they do margin calls twice a day. So IMVM, initial margin, variation margin for derivative, once in the morning, once in the afternoon. So that's done twice a day. That brings huge inefficiencies in terms of collateral management for the buy side. And so what we are doing with the Société Générale and other PBs is to have more real-time collateral calls, like margin calls. And when we did a survey with the buy side, and they told us just that alone, just having better pipes brings 40 to 60% added profit. That's a survey we did with them. Same balance sheet, same risk, just better use of collateral, more efficiencies on the plumbing part. Yeah. So again, like better plumbing, 24/7, more real time, compose, and private, configurable privacy. Yeah.
Excellent. Arik, I'd love to get your thoughts. Again, the questions are main approaches to privacy preserving financial infrastructure and how do confidential transactions differ from traditional blockchain transactions?
Right. So I think Jose started like deconstructing it, and so I think it's a good way to think about this in terms of approaches. So I think as we think about it, so there's like multiple aspects we need to think about a blockchain transaction. The first question is, where does that transaction happen? If I have privacy on Optimism, but the transaction is happening on Arbitrum, I'm not getting privacy, right? So the first question is, where is the transaction? Where are people operating? And so you basically need to bring privacy to the place where people want to operate. There's some of the options that are here, but also generally say we're going to bring everybody to a different chain for privacy, versus the other approach says people are on this chain and we're going to bring privacy to them, right? So that's I think is the first distinction. And we at Zama, we believe in the second approach. We want to bring privacy to where you already operate, because we believe that there's network effects into where people operate. And privacy is a consideration, but it is not the only consideration. If your counterparty only uses one blockchain and you use a different one, you cannot interact. And so I think this is the first thing, is where does the transaction happen? The second thing is the roles in the transaction. So the question is, what is the role of different infrastructures in the stack? So we can think about maybe 3-4 layers. There's probably I probably map 15 layers, but if we talk about 4 basic layers, you have the blockchain, you have the token, you have the dApp, like an application that people interact with, and you have the wallet. And if you try to map privacy protocols, you will a lot of times find they delineate different aspects of the transaction to different counterparties, to different parts of the stack. So the way we believe, the way we approach privacy is we think it's a stable coin problem, right? So we believe if you're on Ethereum and you have an Ethereum wallet and you manage this wallet to manage your funds, then your wallet address is your Ethereum wallet address, right? We don't think we should take it to our level to control this. So the way we think about confidential transfers is you have a stable coin, and that stable coin is an asset like the assets like the assets that wallets know how to operate with and interact with, the kind of thing you can compose into other things. And eventually you want to create privacy within that layer. And in our situation, what we're basically offering at the core of the private stablecoin space is a stablecoin where people don't know how much you're interacting with. And so we're basically taking that privacy question to the stablecoin layer, where different stablecoins can offer you different levels of privacy. They can offer you different levels of visibility, different guarantees, and obviously as it interacts with different apps that compose to that, right? And then it goes to the technology that you use to basically to create this privacy. But I think this is a bit of a way to think about this space is where do you want to operate? Who do you want to be able to control different aspects of your privacy? Like, for example, do you think privacy should be controlling your keys as well? Or is it only an asset level thing and your keys belong in a different place? Do you think your keys need to be basically moved to a different kind of key that you have to support on off-chain and backup? Or do you believe that the core information needs to stay public, right? And again, I think we in that space, we believe that the information needs to be public. It needs to be encrypted to be private, but it needs to be public. Because once you take that information into the private space, you basically go into an entire new area of how do I back it up? How do I make sure I don't lose it? How do I make sure nobody who broke the protocol can basically claim they spent my money even though I never did, or something like that. So I think that's kind of a bit of a split of ways of looking at it.
No, thank you for that answer. That's fantastic. Getting lots of great responses here. Lukas, on that topic, what infrastructure layers do you see needed to exist to support these private payments? Or, feel free to answer which privacy approaches are seeing the strongest institutional interest?
Yep, actually, I sat down a couple of months ago and asked me the same question. How does the stack look like? What are the different approaches to actually enable privacy on public chains? And I came up with 7 different approaches. I think I guess I covered all of them, but happy to discuss this. We also see most of those approaches represented here in this call, which is quite nice to see the variety of how teams approach the same problem with different solutions. I think on a high level, the question was also, how does a confidential transaction, a private transaction, look different from a standard public one? And the main thing you see in a public transaction is you see the sender address, you see the recipient, you see the asset, you see the amount. You see, okay, this is the transaction data, basically. On a private transaction, you have all or partial of this information somehow encrypted, shielded, not visible to everyone. And to get to that, you can either go do this encryption directly on-chain, right? Or you introduce some additional parties and some additional components to the existing chain. If you go the on-chain route, what we've seen already a couple of years ago, the UTXO model with Zcash, where you have kind of native privacy baked into the protocol, which I guess is the strongest in terms of privacy. Downside is it's a bit less programmable and flexible, what you can actually do with it. But we also see that a couple of teams try to replicate this UTXO model now on account-based chains. So running on Ethereum, you basically have an account-based system, but you replicate this UTXO model in a smart contract and try to get the same benefits you would get from a native chain. Other approaches we also see on when it's directly encrypted on chain. I think it's for example, the Solana token extension. Try that one to use kind of lightweight cryptography to encrypt certain values directly on chain. But cryptography always comes with certain overheads, and blockchains are not the best suited ones to heavy computation. So I would say that you're kind of limited what you actually can do directly in an on-chain context. So this ends up, the other approach, the other solution you end up is doing some off-chain computation. This can only be done if you have certain operators, like you have a single operator, which you trust, which means you also share all the data, all the private information you would share with the single operator, but the single operator can shield information from all other network participants. I think that's an viable approach in some cases. Sometimes you might even not want to have the single operator to actually be in control and see all the data, which means you can also run the operator in an encrypted form, right? And this brings us actually to this more sophisticated approaches of cryptography, where you have FHE, like Zama is doing, or the MPC approach we are going for, or you default back to some hardware-based trust assumptions and run your encryption in a TEE. I think that's kind of the map I see, the different approaches I see. So far, I didn't find another one, so would be curious to understand if there exist more.
Yeah.
But I think that's kind of the landscape we are currently facing.
Excellent, thank you. And George, any thoughts to add before we close out this section?
Yeah. So I think the mapping actually has I think 3 dimensions. So first is private blockchains. Second is public blockchains with private amounts, and the third is public blockchains with private wallets and private amounts. And I think there are like strong use cases why the wallet should stay private, right? Because if you encrypt certain amount, if you hold 100 million, you encrypt 50, and then you're making payment of 50 million to your counterparty, someone can still de-anonymize and see the initial balance and deduct the end balance. So I think where we focus on actually encrypting both sides of it, where you encrypt the amount and the relationship itself, so you can actually introduce privacy at any part of the transaction supply chain. And I think the second point here is also supply chain, because if you're on a private chain, then the probability that your counterparty is on the same chain is lower than on Ethereum or Solana or main public chains. So I think what actually privacy on public chain enables is that you can continue supply chain of payments without anyone becoming public before the off-ramp, if there's ever off-ramp. And I think that's a big missing piece that we are not discussing, that how do we make sure that privacy stays? And the last point, actually, before we wrap, is about cross-chain. So privacy on public chain doesn't mean that we should only use this privacy on public chains without introducing on chains with opt-in privacy such as Tempo or Arc. Because if you want to do cross-chain privacy, you can have protocol deployed on each chain, and then you will achieve cross-chain privacy. You will move from, let's say, like Ethereum to Solana, and the recipient stays private as well. But in the case of chains with opt-in privacy, you won't be able to achieve this because these standards between chains are not interoperable. So I think there's a still need on privacy on public chains with opt-in privacy for cross-chain transactions. And that's exactly what we solve as well.
Excellent. Thank you all for adding your thoughts. Again, these are very important questions, and we're solving very important problems here. I would love to close out with lessons from the field. Would love to get a little addition from each of you. I'll start with the first question, and George, we'll just go reverse order again. What's the biggest misconception institutions have about privacy in your view?
Yeah, I think that it's hard. So privacy became easy, and it's super easy to introduce on any level of the stack, and you would just introduce all of these levels. And second is that it's privacy from competitors because they see it as something abstract, not really something that is happening in reality. So the real privacy is actually from counterparties, not from competitors.
Excellent. Thank you. And Lukas, would love to get your thoughts. In your experience, what's the biggest misconception institutions have about privacy?
What's quite surprising to me when talking to various stakeholders in the industry is still the level of awareness and understanding how blockchains work, right? So oftentimes I keep hearing, we just use different wallets, right? And we have a hot wallet and we use that one as a gateway and then send it back to our cold storage wallet. And I get the feeling and the impression that those people believe if they send it to a cold storage wallet, it's within their sphere and nobody else can track and see what's going on. So I think we as teams building in that space, we have to still do a lot of awareness building, education, and really make people aware what's going on, how blockchains work, and what you can see when you interact with your wallet on a public chain.
Awesome. Arik, what, in your view, are the biggest misconceptions institutions have about privacy?
So maybe this might be very specific, but I don't know. That's the first thing that came to my mind is, so basically zero knowledge proof, ZK, was the first way privacy was introduced into the blockchain. And so the same model as Lukas described, the same model was basically like in Zcash, but then it was copied into like the ZK protocols, ZK privacy protocols on Ethereum, like Tornado Cash and all of the continuations. And because that's the main thing that provided privacy initially, people just assume that's how privacy works. And so whatever they know about privacy pools or ZK-based privacy, they assume that all other privacy solutions are kind of the same. And so like a lot of the questions that people would ask would be very targeted to that. They'll be like, so when I deposit into your pool, how does, there is no pool. And like, no, but like, what is the anonymity set of this? And like, no, the anonymity set is not relevant here, right? So there's like a lot of these conceptions that people derive from this ZK way, which is very specific. ZK is a super impressive, amazing technology, but it works in a very specific way. And I think people just kind of assume in the blockchain space that that's how privacy has to work. And so I think a lot of like, I don't know if the other non-ZK based protocols here would agree. Some of the time you spend on explaining to people, no, wait a sec, it's actually very different, not just slightly different. It works very differently the way we look at, solving that problem. And the trade-offs are, very, very different. So I think for me, this is kind of one of the first things we usually stumble into is re-educating that privacy has a lot of flavors. Lukas described it. There's a lot of flavors to how you do privacy. And I do believe we'll see a lot of use cases find the right technology for their use case, kind of like over time, adopting specific technologies for specific use cases as like, oh, this technology kind of works here versus this technology kind of works here. And things start to get more clear across everywhere.
Excellent. Aurélie, any thoughts to add here? Lessons from
Yeah. So for me, again, the biggest misconception is like you must pick like a fully transparent or fully anonymous. I feel like real markets, they live really in a configurable middle. And so if you're like a fintech building a stablecoin infrastructure, like make sure to design for need to know from day one. It's difficult to retrofit it and keep composability non-negotiable, because again, that's the North Star of blockchain, like the USPs, like this composability aspect. And so that's often like the misconception: how can we be private and at the same time compose? Which is possible. And another misconception, a bit different, it's people confusing like wrappers IOU with the real thing. For example, DTCC, tokenized US Treasury with DTCC on Canton is the actual books and record for DTCC. It's not a wrapper on IOU. And the analogy I love to use is like when you go to a casino, you give your cash, you get your tokens. When you get out of your casino, you want that when you give your token, you get your cash back. So you have to trust that cashier, you have to trust the issuer. So that's another common misconception, I would say. And the third one is really about like there's so many opportunities right now to disrupt. Like there's so many inefficiencies. We talked about like the treasury use case. We talked about the prime brokerage use case. Broadridge on the repo on Canton is doing $400 billion of volume daily. That's 4 times the overall crypto market. So the crypto market today, like looking at coin market cap, let's say, it's $400 billion per day. Broadridge alone is doing $400 billion a day. So 4 times that. And because again of like inefficiencies in the repo market today, like the repo market is like overnight repo inefficiencies with Broadridge can be done like on a 30-minute basis, basically. And so very important, like there are so many inefficiencies in the market right now that are just huge opportunity for innovation. So keep looking for those.
Mm-hmm. Thank you so much. And Jose and Sophia, will close out with you. Lessons from the field. Jose and then Sophia, get to you, and then we'll close this out.
Yeah, I think a lesson from the field has been that privacy doesn't have to be a one-size-fits-all approach. Talking about configurability, I think it's important to identify the different use cases that require privacy and ensure that you are working with a partner that enables you to enforce the right configurations for as many use cases as you might have. So I think that's a big takeaway. You don't have to go into a one-size-fits-all setting for privacy. You can figure out a way to make it work for you. And there's technologies out there available to make that happen, including Prividium per se. And then the other one that I would highlight quickly is that you can have privacy and access to the capital markets on chain. You can have both. It doesn't mean that you have to be siloed. It doesn't mean that you have to live on a liquidity island per se. And so finding a partner that's going to help you gain access to the most capital opportunities or economies on chain would be a critical thing to think about.
Excellent. And Sophia, saving the best for us.
I don't know about that, but I really agree with a lot of what has already been said. To add a couple points to it, I think Utila is doing an incredible job of enabling users to easily interact with some of these private options that are on the market. And so one learning from the field has been people like to use their existing infrastructure and they want it to work with all of these bells and whistles. And so Utila, I think, is doing an incredible job of enabling that and enabling access to these private stablecoins like USDCX on Aleo, as well as a number of other programs and opportunities for businesses to achieve their goals without disclosing sensitive information. And then the last point I'll land on is that one topic we have not discussed is liquidity. And I think that's a big topic, is that as you think about sending payment cross-border within your treasury system between counterparties, you need sufficient liquidity, and that is something that is critical for day-to-day business operations, and something that Aleo is doing really well at. And so I think there's been a lot of learnings over the last several years, and it's great to see conversations like this bring together the leaders in our field to say, here's what's working, here's where there's still room to grow, and here's what the main business outcome is, so that institutions and enterprises can act now, because the time is now. There's so much opportunity. There's so much going on in this space, and I'm really excited for the year to come.
Excellent. Oh, thank you. This has been such a great session. I will close it out with everyone, one word. What is your prediction for the World Cup? It's top of mind for many across the globe right now. If you've no say, feel free to. But yeah, Sophia, any thoughts?
In a single word.
Who's going to take it this year?
Oh, I'm rooting for Spain.
Spain. Okay. Aurélie?
France. Huh?
Jose?
Rooting for France, yeah.
Colombia.
Colombia. Okay. Lukas?
I have to say Austria, not to confuse with Australia. Austria.
Arik?
I want to say Spain, but obviously after the first game, I'm not confident anymore. But I'll still stick with Spain.
All right. And George?
Georgia is not playing, but I still believe it will win World Championship.
I like that. You got to have faith, blind faith. It's amazing. All right. Thank you all so much for joining. Thank you to anyone listening in. Appreciate your time. This has been a great session, and hope you all have a great rest of your week. And stay tuned for the next Stablecoin Builder webinar.
Thanks for having us.
Thanks, everybody.
Thanks, guys.
Bye-bye.
Thank you.